Good day, warriors. Follow through to the downside in metals. Dollar still firm, although euro not as weak as cable. Trying it here. How you doing, Ingmar? Michael, Ryan, Blake, how are you? James, Stell is here. Let's see, Steve, Kman, Brian.
Morning, Coach.
Hey, how are you, buddy? Hugo. So, Stell, we'll start with you. So you could just take the screen right now before I do.
Sure thing. Sure thing. So it's been interesting couple of days, that's for sure. I'm going to start with the yields as I always do. And remember when we broke this, I know I haven't really drawn it too well, but this kind of trend line, I always said I think these are going to resolve lower. I've been long TLT, which has been going well,
Yeah,
and
nice.
we're making new lows. So I see no reason why this trend will not continue. I think there's a lot of risk in with the government shutdown, not getting any numbers, we're not getting any data. There's a risk that it's going to come whenever it comes out. It shows a much worse picture than people think. And overall, Powell told us that QT is coming to an end soon. So what follows QT usually? Well, a period of nothing and then QE. So I still think the market vastly underestimates the chance of QE coming a lot sooner than people think.
Yeah,
So
maybe with all these credit issues beginning to pop up.
yes, the only thing that's keeping um, things kind of, I don't want to say normal, but sentiment a little bit higher is stocks, which is just not dropping. And I'm absolutely amazed. Remember, I've been saying for weeks and months the path of least resistance is to the upside in stocks, and it has been. But at some point, valuation starts to matter. And at some point, when the average consumer is unable to pay basic needs and has to borrow to pay for groceries, then at some point this will translate into economic activity, decreased economic activity, and then at some point stocks will have to follow. But for now, I mean, the S&P is just ridiculous. New highs, very close to all-time highs, only a few points away, and still nothing bearish technically about it. But as I said to everybody on the chat room last week, Wednesday, before I went away for 4 days, I said, right, I am now flat everything, sold everything, gold, silver, platinum, everything except my long in TLT. And I'm starting to feel really nervous, even though there is no technical evidence of stocks going lower, not yet. I would be really nervous if I was long here. If I was long and I made money, which I did in a few names, I took my profits and got out of everything. And we have to talk about metals. Um, Big negative day yesterday. Apparently the fourth biggest one-day drop percentage-wise in the history of gold or something like that, and a similar story in silver. And I was expecting after a day like that some kind of pullback, and it's just not happening. It just keeps going one way.
Let me ask
So
you this,
yes.
Stell. Do you consider it important to have direction from the gold silver ratio in making your decisions
Yes,
between gold and silver?
yes, I always look at the ratio, and I have it here as well, always. And the problem is that it can get quite volatile. We've gone from 70 to 105 and back, and so you get these. You get these quite volatile moves on the ratio, but if you look at this over the past year and a half, we've been around 80 something. Okay, there has been a couple of spikes down and up. So I do look at the ratio. And of course, as the ratio goes towards 100, I prefer silver as a long, and as it drops, I prefer gold as a long. It's as simple as that. And I also look at platinum versus silver to see which one of the two, because remember, I've been long platinum as well, and the more platinum gets undervalued, the more it gets close to this trend line, which is, if you go to weekly, it goes all the way back to 15 years. The more we get close to these levels, the more I'm going to like platinum instead of silver. But for now, I have nothing. I got out of them last Wednesday, so I didn't catch the top. Obviously, I'm not good at catching tops or bottoms, but I think it was a good move, and I think that we're going to see lower levels. How much lower? I really do think that between 41 and 42, as we get close to this trend line in silver, I know it's away for quite a way, quite a margin away, but I've been saying this above 50 as well, and we're already below 48. So I'm going to be very patient. I scale in and I scale out. People who are Forex Analytics members know this. But now I'm not getting ahead of this train. I wait for this move to stop. And imagine what happens if we get risk off as well in terms of equities. I mean, this move theoretically is going to accelerate both gold, silver, platinum, because remember, in every major downtrend, everything gets sold, especially things which are liquid, especially things which are have value, and especially positions where people have been making money on. So if you've been long gold or silver or platinum in the last year and a half, you've done very well. So, this is one of the first things you're going to let go because that's human psychology. Oh, I'm in the green in this quite a lot. I'm going to sell that, even though you really shouldn't be doing it. What's happened before. You should be doing now. What do I want to do now going forward? But that's how people work. But anyway,
Where are you at on the dollar?
the dollar, I'm still bullish. Remember, I said this a couple of weeks ago. I said I'm no longer bearish the dollar. I don't think we're going to get to 95, and we are rallying. And another reason why I think the dollar might rally is if and when we finally do see some risk off in equities, almost always the dollar strengthens. And people hate the dollar. They're saying, oh my God, the deficits are huge, 6% deficit in terms of GDP in the US. Well, look at the Eurozone, look at other countries. It's more or less the same or close to. So the dollar has been really hated for about a year or so, and I think that is going to bounce. How far up? That's a good question. I think we might see 102 as a first target, and then we reconsider. So in general, and I wrote this in chat room this morning for people who were asking why are metals going lower. In general, when everybody has the same opinion, I never want to be in that position. Never. So at the moment, people don't like the dollar and people like metals. So I want to be the other way around. I'm not going to short metals. I rarely do that, but I'm not going to be long. So I sit tight. I'm in almost 100% cash apart from my TLT position, and I reconsider. So
All right.
yeah, and
So
so
you wrote it up. You
yep,
got out before it took a hit.
yep.
And what else can you ask for?
Well, yeah, the best thing would be to catch the tops and bottoms. I don't think anybody in the world does that, and if they say they do, they're probably lying. So
Okay, I'm a liar.
um, yeah, and the other thing, actually, I showed the 10-year US, which is broken. 10-year gilts are also important because they're gapping down, the yields are gapping down because we had CPI today, which was expected to go up by
Wow.
0.2%, and it didn't. Having said that, it's still 3.8% or something like that year on year, which is way above the 2% target. But they've broken, and the gilt trend line is a lot cleaner than the US one. And as soon as we broke that, I said here, I saw it on the chat room, I think 10-year UK yields are also going down. And people were saying, oh, but why? Because there's going to be lots of borrowing and the deficit, blah, blah, blah. Yes, macro might kind of make sense, but we're now, this is a market where this is, when you talk about fundamentals, very often they take ages to work out. So for me, when I saw this technical break, I said, throw fundamentals out of the window. This is going lower. And just to be clear, I think 10-year US yields are also going to be going quite a bit higher. But first, I think we're going to be hitting or trying to hit this 360 low, and then we see. But sometimes I have to forget about fundamentals and I forget about macro and just look at what the chart is telling you. Even daily charts, which I look at, I don't look at 1 hour or 15-minute charts. And this chart is just telling me, do not be long these yields, right? As soon as this broke, and we broke the 50 DMA, 200 DMA, everything. It's just one-way traffic. So yeah, that's my broad view on things. I don't know if you want me to have a look at something else, but
Yeah, what are you doing in bellies?
In pork bellies. Never traded
Yeah.
those, sorry.
No BLT sandwiches. Okay. All right. How about orange juice? You doing anything
Frozen
there?
concentrated orange juice.
Yeah. Do you have inside information like Eddie
Cla
Murphy on that one?
Clarence Speaks. That's my
Yeah.
favorite movie of all time, man.
I know. God, Clarence really, had a very interesting relationship with the gorilla.
With the gorilla,
Uh,
yeah.
yeah. Anyway, congratulations, buddy. You've traded it like a master.
Thank you. I get lucky sometimes, but it's good to be disciplined and have your targets. That's number one rule. And I got out at my targets. Okay, I was a little bit early. Okay, win some, lose some, but you have to be disciplined. That's what I would take away.
And nothing wrong with a little luck. I'm not against luck. Who
Yeah.
who's for luck? Raise your hand. You really want it when right before you're ready to enter a trade, you're saying to yourself, I hope this one works.
Yeah.
If you're saying that right now, walk away from your platform. All right. So thanks, Stel.
Thank you.
All right. So I've been listening to you for a decade. Never gets old. So appreciate it. Let's talk a little bit more specifically about what's happening in currencies. So start off with Ryan. So once we got back under 1650, we continue to go lower. Um, I'm getting long for a trade, maybe back to 1650, just because you know I could. It's a real tight trade. I mean, you're only risking about 50 pips to see if it could put in a higher low. And then I noticed even with the euro down, Swiss is down too. So I'm shorting Swiss. I shorted Swiss too, looking for it to at least pull back, if not take out this low, which was confirmed. Ryan, what are you doing here with euro and cable?
Nothing at the moment. I'm still waiting. If we get euro down to 115, that's my level. But obviously, there's a nice little double bottom there
Yeah,
around 115.50. Yeah, we're just getting another swing in the dollar. All of a sudden, the dollar's in favour, be it metals related or whatever.
yeah,
That's going. Cable's holding up a bit better.
yeah. It's putting in a nice candle right here for a higher low.
Yeah,
Is it
after
is it
that big.
worth a shot here?
I think if you're leaning on 133, that's your risk level, that's your pain level.
Okay, because look at EG. I mean, it looked like it was going to have a good day, and then this last
Yep.
candle says no, no, it's not.
Yeah,
Uh,
it looked like it was going. I've cut some of my longs that I've been sitting in for a while because it's costing me money sitting in them. But yeah, we couldn't even get up to that 87.20 level, which was a bit of a concern. And now it's running out of puff again. But yeah, 133 is going to be a bit of a level. I think if we break it again and it looks like it's holding below, then we're probably going to at least test those prior lows.
okay, is this a bull flag where USD CAD's going to take out 40.70, 40.80, or are we in a corrective phase where we could come back down towards 39-ish?
I thought we might be having a crack at doing that yesterday, but then we had the CPI data and it sort of fell out of bed and just nibbled under that 140 level. But it's back above and it's looking green again. So I don't know. It's another one that's stuck in a very, very tight range at the moment. It's keeping the momentum going. Unless it's getting under my main level, which is 39.78, it's still bullish up here. But
All right,
it's got to
your
take out
high,
those highs.
yeah, it's got to take out 140. Your highest conviction position or something that you're looking to do.
Highest conviction. Don't know about that.
Or no.
I'm the other side of the your
Right.
Swissy trade. I'm long at in Euro Swiss against the big support we've got down here.
Okay, I don't think I have Euro Swiss up there, but so you,
Yeah.
you like that, the Euro Swiss. All right.
I like it while
Sure.
it stays above 92. I
Okay.
won't like it if it's under 92.
Okay.
But yeah, it's big support. It's at one of these levels. You just got to give it a go.
Okay, I really appreciate it, Ryan. Thank you,
Thanks,
buddy.
mate.
Kay, how are you? Good morning.
Hi, Dale. Hello, everybody.
Is 52 a failing rally after this first break in US dollar yen?
It for sure is putting up a fight, and so are some of the yen crosses. You know
Yeah, I
what?
noticed.
I think the market is looking at other stuff because those metals are moving so much. Do we have meetings, yes or no, between Putin and Trump, between Xi and Trump? Now it seems that we may not. There's a lot of other stuff going on, and I was talking about it with somebody as well in our room, and it's really maybe it's just the focus got a little bit away out of the yen right now because this morning, Takaichi, and then confirmed also by her finance minister, Katayama, said that they are going to work on a very big plan to to put more stimulus in the system, but the market not really reacting to it. Yeah, I think the focus is a bit elsewhere, but it doesn't take away that from the fact I can't be really long yen. The yen, the currency, right? Not like
Yeah.
dollar yen. So I got like really, but I mean, very tiny positions actually on. I was long, took a bit off, and now I'm just waiting to see what's going to happen. And if you ask me the same question as you asked Ryan about high conviction trades, I don't have any right now.
Yeah, it's
And
understandable.
it's a case of everything's leading a bit its own life. You have too many opposing headlines out all the time. Because for instance, let's take that Aussie, and now it's a fact where the market seems to want to buy Aussie when the US says that they are going to get closer to Australia. So, I mean. What is the Aussie China trade still doing? Is it still ongoing or not? So there's too many headlines, too many opposite forces pushing and pulling. It's really hard to have a conviction. I am in tiny trades. Well, I mean, no, I mean I've got one running, but it's something that not everybody is looking at. I'm short Euronoki, but that's one that I would like to defend. But because I think we may somewhere find a not a bottom really in Brent or so, but I also think that Norwegian kroner should do pretty okay into the year end, and also Norway with Europe moving away from Russia for more energy, gas and oil should benefit Norwegian kroner somewhere down the road. So this is one that I'm trying to defend. And for the rest, yeah, no big conviction. I'm like everybody, waiting to see if 4,000 is going to give way in gold. But I've got my sniper rifle ready. That if we get a false break or a big flush, I may actually buy a few again in gold. Silver, I'm leaving it alone for now.
Okay. Well, I think the mover in yen is going to be risk off.
Well,
So
yeah,
that's
I
why I'm
mean,
in here. That's
yeah,
what I think.
but do we have risk off?
No,
We
no.
spoken about we
If I
spoken about that
waited
on.
if I waited for risk off, I'd be selling the yen 200 pips lower. If
Yeah,
I
exactly.
waited for it. So I'll trade the formation. I have a narrative in the back of my mind, put the
Yeah.
positions on technically, but I'm just saying I think the reason, if I'm going to
Mm.
be right about this trade, is that we're going to have some risk off.
Yeah, that is one of the conditions. But in the
Yeah.
meantime, it's a long wait, and you pay money, right, to be long yen. And we also
Yeah.
spoke about it on the flow show. I mean, define risk nowadays. I mean, it's very hard to pinpoint the usual correlations on risk. I mean, with
Yeah.
stocks at all-time highs, okay? I mean, if you look at the yen being a risk currency, dollar and euro yen should actually be higher with all the stimulus that that Takaichi wants to put in place. But then you have an opposite force where the yields are coming lower everywhere. So that's putting a bit maybe under the yen. If you talk about traditional correlations, but there is just no traditional correlation picture ongoing right now. For that, I think we need either more certainties on geopolitics also, or the market to completely quiet down. Then we can pick up those correlations again.
Okay. All right. I'm just looking at energy after Chris's interview. Who thinks we're going to war in Venezuela? Of you guys, you think we're going in?
Oof, I'm not going to speculate on that one.
Okay. Well, I think we covered much of the board. And anything else that you want to mention, Kay, before I go over to Blake?
No, really not. Really not.
Okay, so we have to, it's okay to not know. It's okay to say, I don't know what to do, because that means you do nothing. And I guarantee you, that period will pass and you'll know what to do.
Exactly.
So it's not like there's something to do. Yeah, it's not like there's something to do every day, and
No, you don't.
Trade off 15-minute charts. I guess there is every day. But if you
when I think we're going to have more conviction is after Friday. I mean, all of us are waiting for, like Kman said, waiting for the see what's going to happen with gold and silver here.
Yeah.
The flip side is, we're all waiting for data. Everybody's looking for the inflation data. Mike brings up a good point. If you look at pricing for the Fed and what the Fed is looking to do, cut rates. There's a 98% probability, for the next meeting, and you're talking about a really high probability as you go into December, and that could really change following the CPI data. And the dollar has been, we could argue the dollar has actually been stronger following just recently in the last week. The dollar has actually firmed up. You're up against a really big trend line. And if the inflation data comes in strong, those numbers are going to change. And instead of the market pricing in a more than 50% chance of a rate cut in December, we could be looking at a very small chance. And if that's the case, the dollar could really rally. So, I think everybody should be waiting for this Friday, and that you're probably going to get conviction then. And then flip side is if the data comes in really weak, the dollar's, the euro is going to be trading back above 117 and probably close to 118. So I think we have to just kind of wait on this. I think one of the other tailwinds that the dollar has is this sell-off in gold. And you guys are talking about correlations. Correlations, you're right, they've been broken. They've been broken quite dramatically. However, the gold dollar relationship, I think, is quite strong still. When you see gold weaken, the dollar is firming, and I think that's one of the things that could keep the dollar, the tailwind in the dollar, if you will, especially if gold takes out the 4,000 level. And by the way, just so everybody can see this here, and one of the things here, I'll just go over to the chat room so you guys can see it. If you look at like where this is gold, right, and its double top comes in below 4,000, the completion level for the double top comes in around 39.60 or so. And then if you look at silver, the head and shoulder pattern comes in, right around 46.20, 46.30. Those are downside targets that are very visible targets for the market right now.
What a difference a week makes, huh?
Yeah, I know. Quite crazy, right? So if we do complete this today, and it could be as early as today where you see these levels in silver and gold, and we complete them, I would be a little bit more careful about being short the euro down here, because look at the euro. The euro has also very similar head and shoulder pattern. It completes about 20 or so pips away from where we're at. And you have a rising trend line there in what's probably a symmetrical triangle. So I'm going to say this again. If gold and silver complete these downside targets and euro gets to this support, I wouldn't want to be short down here, because once they complete, the dollar's probably freed up to weaken again. And and just consider the fact that we're in a range and we have really important data on Friday. So, trying to get ahead of that data. I always do, like, when one of the things that we talk about with our community, like, when we're done here, about 45 minutes from now, Steve and I do the morning edge. Then we have the daily roundup. These are private shows for the Forex Analytics community. Nick and I, we talk a lot when we're on there, and we strategize with our traders in the community. I always explain to people, because I've been doing this for so long. I know Kman does this too. Ryan does this as well. Dale, I know you do this. We prepare for what we think is going to happen. So, like, for example, if I think that the dollar is going to strengthen following this CPI data, if you will, and that was the case, which I don't know. I'm not saying that I feel that way, because I really don't know. I think it's up in the air. But if I had that inclination that I wanted to play into dollar strength, I'd be shorting the euro up in the 116.50 level or so, looking for a downside break following CPI. So I have a running start, getting short up here, adding here, getting a running start with data going in my favor. The flip side to that is, now we're going to be looking at something a little bit different. If we have weak CPI data, which, again, I don't know what we're going to get, but if we have weak CPI data and the euro reverses and starts to head higher, then you start playing into, okay, what am I going to look at that could factor into some dollar weakness as we go into the end of the month? Then you start thinking, okay, well, what could be the catalyst that drives the euro higher? And then you start looking at the ECB meeting at the end of the month and saying, maybe the ECB is just a little bit more hawkish and they don't mind, a strengthening euro, and maybe that's the catalyst that drives us higher. So you have to look at these data points that are coming out, like this Friday. If you had conviction on what you think is going to happen, you have to try to get yourself into a position that can really capitalize off of that once the data is released. I'm getting into kind of in the weeds here as far as trading goes, but the guys, if you don't have these conversations with people around you all day long, then you're not in the Forex Analytics community. You should be in there. It's only $1 for 10 days to try it out. You should be trying it out. Jump in the community, because we're going to be live with CPI data, navigating through it all on this Friday. So hope to see you all there. Ryan, do you want to
Also, Blake,
go
there's
ahead?
been a new law passed that if you guys had some problems with the police or the law, that you could work off your community service in our chat room.
There you go. Yeah, that for all of our convicted felons listening. There you go.
Yeah, I mean,
Back in the day,
Whoa, do we get Trump in the room?
back
Yeah.
back in the day,
Yeah.
when you were a convicted felon and you wanted to get out of shit, you joined the Marine Corps and you joined the infantry. I would say in my infantry battalion, 80% of my colleagues were convicted felons that
Yeah.
got court ordered to go into the military. So
Yeah.
back in the day, that's how we did it. But now you
Boy,
can
you
do
have to be
community
tough.
service in the Forex Analytics community. There you go.
Yeah, do it.
Yeah. So real quick, Ryan, any thoughts on the process of trading that I was just talking about?
Yeah, I do the complete opposite. I never pick a side going into a data point.
Really? I try to get ahead of things, you know, that's because I'm smarter than the market, Ryan.
Yeah, of course, of course. But no, it depends on what you're doing. If I've got a view on the US interest rates, whatever, then I'm going to be doing a longer term trade. I'm not going to worry about a data point too much. But I'm certainly not going to sit here and go, I think the dollar's going up because CPI is going to be hot and I'll get long, because it's a coin toss. But I will manage trades that I'm in. If I think there's a risk of a dollar trade I'm in over the CPI data, I can reduce it, get out, come back in after the data, or just react to the data. I like to have my levels built up around the current spot price, shall we say, and look to trade that depending on what the data does.
Sure.
You know, because look at the market today. We're sitting here now, and the dollar's looking strong. It's only Wednesday. By the time we get to Friday, the dollar could look a piece of shit again, and then it's in a completely different place altogether. So in these sorts of markets, CPI is going to be important because it's the first piece of data we've had since the shutdown. So the market is going to be all over it. Is it going to change the game for the Fed? I'm not sure. If it comes in up as is expected to, that's going to be the third month out of 4 we've seen rising inflation. And you know, it's not a problem for the Fed at the moment because they're concentrating on jobs, but jobs wasn't a problem until it became a problem. So inflation isn't a problem until it becomes a problem. And you know, we get a run into the end of the year of inflation ticking up 3.5, 3.7, you know, maybe even 4%. At some point, the Fed's going to take notice.
Yeah. Yeah, and they could. But this is where pricing changes, and this is where interest rate expectations change, which can really influence, well, it's the only thing that really influences currencies. So it's going to be interesting. Friday's going to be it's going to be an epic day of trading. So make sure you guys are all in the Forex Analytics community. Also, I'm going to mention this. I know I see Luke is here. Real quick before we go. Trader funding program until November 2nd. That would be right up until Sunday the 2nd. 30% off all instant funding plans, and then and one-step assessment. So check out the trader funding program. Use the code SPOOKY30. You can get to trader funding program right from our website. It's just right here. Just click right in the middle of our website. It'll get you over to the trader funding program. Great way to take advantage of the volatility. We have a lot of volatility, obviously, especially with gold. Holy crap. Well, I want to let Dale talk to Luke here, and we can talk a little bit about this volatility that we're seeing in precious metals. So you guys make sure you stick around. We have a great guest here today. Ryan, Kman, thank you guys for all of your input. Make sure you guys are listening to Ryan and Kman on the Flow Show. I always listen to the recording as soon as I get up here on the left coast. And Dale, I'm gonna pass it off to you, buddy.
All right, thank you, Dream Team.
Cheers,
Thanks,
chaps.
guys.
Thank you, mate.
Luke, my friend, my trading warrior brother. It's always great to see you. You know, another 3 months must have passed, right? So welcome back.
Yeah, it's crazy.
Yeah. So you know,
Thank
so
you.
cockroaches, you know, pest control, starting to see what may be a bigger problem in the shadow banking system. You know, people have talked about that for years, but you know, nothing manifests until all of a sudden you hit a tipping point. Is this going to be the unwind of what happens with risk? Do you believe these credit issues and the junk bond market is more of a short than even treasuries? Junk looks pretty scary to me here.
Yeah. The heck of a question. I don't know. I'm seeing the smoke. I'm not seeing the fire yet. It's not obvious to me. Um, it's the illiquidity of some of these things, right? Private credit and everything. You know, we've known the marks are dubious at best for some time. what forces them to actually take marks, and then where's the leverage? Where's the leverage to make it spread? And I guess the leverage in to make it spread would be the system itself, right? So,
Do you
I
see
keep
any do you see any comparisons, and people are making them,
I,
between
s-
what
I
happened
see
in '08 and what could be happening now?
Yeah, I see some comparisons, absolutely. The thing that's so different now is the fiscal situation in which it's happening, right? So,
Okay.
like, if we have that right now, that is, that's basically lights out for, and when I say lights out, that's not even the right phrase. That is basically the Fed's going to QE, like now,
Yeah.
because the Treasury market is going to blow up fast. That's different now. There's still this view, I think, that hey, people will go to Treasuries, and I think they will. I think that's right, but I think they'll go there. I think we'll see what we saw post Liberation Day, which is people went to Treasuries for like. Actually, it's probably more like March. If you remember March, right, the plan was Bessent's going to scare money out of stocks into bonds, judge us on the 10-year. And the 10-year went down with stocks for like 10 days. And then all of a sudden, the 10-year yield started going up with stocks going down. And then it was going faster. And post Liberation Day, yes, you saw dollar down, stocks down, bonds down. That's, I think, what you would see if there was some sort of, private credit issue, and gold up within all that.
Okay.
So that's where I struggle with it. That's where, for me, the metaphor breaks down because you're still, true interest expense. Your entitlements and your interest are still 100% of receipts. And that would suggest receipts are about to plummet, which means the United States, the center of the system, falls into a default or print decision almost immediately. And markets will start discounting that almost immediately. And of course, they're not going to default, they're going to print. So that's it's I think if that starts to play out, you would see a bid for 10-year, or in other words, right, 10-year yields down and stocks down and dollar up. And then within 5 to 7 trading days, I think at the most, you're going to see 10-year yields go up with stocks going down, and that'll happen for a couple more days. And then, the dollar probably continues to rise. Gold probably takes off like a scalded cat at that point, higher. And then they come in with, you know, whatever amount they need to do to calm the treasury market down.
Okay. Do you think it's just a market that got too overbought, silver and gold, as to why it's coming off? That's just a correction in a bull market. There's gold.
Yeah, I think so. I mean, it was, as you know, anything that's sort of trading vertically that way, that is not sustainable. So yeah, it was whatever the record amount away from the 200-day and
Yeah.
whatever the case it was. Look, I gotta, I
So,
gotta. I mean,
it's
I
just
gotta.
a breather. It's a breather in the debasement trade. What
It's a
would make
yeah.
you, yeah, what would make you think that people have it wrong on the debasement trade? Because some people believe that most people are on that side of the fence. They've been working that trade forever. I mean, prices of Bitcoin, prices of gold, what's happened to the dollar. It's all the debasement trade, and stocks can do well while we're debasing. What if people have it wrong and it's not a debasement trade? And what would tell you that it's no longer a debasement trade?
Oh, I think it's pretty straightforward. You would see the dollar rise. You'd see
Okay,
stocks. You'd see
dollar.
stocks tank. I mean, stocks are going to tank if the dollar rises much more. You'll see 10-year yields start to go up with that. And I think from a geopolitical standpoint, the debasement trade is very simple. If you see the United States basically say, you know what, we're going to let China make our military for us, then the debasement trade's off.
Okay,
That's not going to
yeah,
happen. And
right.
the other way that the basement trade is off is if Putin and Xi say, "Oh, you know what? We want to, we want to be Boris Yeltsin, and we want to sell our countries to the American corporate and Washington policymaker elites for pennies on the dollar, so that we can be American vassals, and we can be choked out by you. And so
Another high probability outcome, huh, Luke?
that ain't gonna happen. That's not gonna
Right.
happen. And that's already been arbitrated, by the way, in Ukraine for the last 3 years. And Russia won. Russia, that's the reason why the U.S. is and NATO are squawking, and Russia is taking their time getting to the negotiating table. It's because they've got the upper hand. So, yeah, I think those would be the things fundamentally. And then also from just what you'd see in the markets. Look, the dollar goes up too much. The world owns, the world has $13 trillion plus in dollar denominated debt that starts to get squeezed, but the dollar has 62 trillion gross, $27 trillion net of dollar denominated assets to sell when they get squeezed by a stronger dollar. Guess what they're going to sell? You sell what you can, not what you want to. And what can they sell? They sell treasuries, which is why for the last 5, 6 years, when we get risk off that goes on too long, and too long has gone from, a few months to a few weeks to, 7 trading days, 10-year yields start going up because foreigners start dumping treasuries to get liquid to address their dollar short, so to speak.
Okay, so here's HYG, the junk bond chart, and it looks pretty toppy to me. I don't know if we'll get to the April lows, but it's the opposite of last year, Luke, where everyone chased yields and, treasuries were going down and high yield didn't even feel any kind of corrections, hardly had any corrections. So this to me seems like a different environment, that a lot of things that people were worried about financially and that could just be starting, it tells me that it really looks a lot like the S&Ps.
Well, and it's interesting because to me, the thing that's really scaring me more than anything else at the moment, and it ties into, the high yield and the S&P, is um, what's happening with AI and robotics, right? There was an article yesterday in the New
Okay.
York Times. Amazon's going to, Amazon internal document was leaked. They're going to replace 160,000 jobs by 2027 with robots. They want it to be 600,000, or excuse me, yeah, with AI robots. They want it to be 600,000 shortly thereafter. I'm hearing this over and over and over, essentially, that AI and robotics are going to negatively impact employment far sooner than expected. And what I think part of what the dollar, or excuse me, part of what the gold and Bitcoin trade has not been dollar debasement, but has been AI. They've been AI trades. And what I mean by that is that we are highly, highly levered system. When AI and robotics start taking jobs and start putting deflationary pressure on wages, how are these people going to pay their mortgages? How are they going to pay their credit cards? How are they going to pay their, and then layering on top of that in the short run, I'm hearing that the ICE raids around the country, not to be political one way or another, but factually, I've heard estimates that there were as many as 20, 30, maybe more, 20, 30 million or more illegal people in the country working. And when ICE started showing up aggressively, they basically threw their keys at the bank for the car, locked the apartment, and walked out and didn't come back. And so that might actually be contributing to some of these delinquencies and things that we have seen, and particularly because private credit has been involved in lending to these people. So between these changes in the short run with immigration and more secularly with AI, like I don't like what's happening with AI scares me to death. Because I've seen this before. I saw this in Cleveland and in the Rust Belt when we shipped jobs to China, right? China was just the first
Okay.
AI. So
All
that's
right.
one thing I am
Interesting.
very much focused on as it relates to, because you would see that in high yield. You would see that in an unemployment rate. Unemployment rates amongst bachelor degree holders ages 20 to 24 is
They
7%.
can't. Yeah.
You take
They
7%, yeah, it goes to 30. If unemployment goes to 7%, the Fed's balance sheet's going to be going towards 10 trillion, 12 trillion, 15 trillion, like that. And so that's why the gold thing, I'm like, oh, sucks, it's down, it's overextended, but that AI is, I think, very much been supportive of gold and Bitcoin, and I think it'll continue to be.
Okay, so looking at AI and throw demographics on top of it as well, shrinking workforce. Sounds to me like an economy that's supported by consumers, the majority of it being consumption, that we're going to have some issues here with everything. Is that the Minsky moment? Is AI the Minsky moment, or could we rename it the Groman moment? I was thinking about, who's Minsky? I know Luke. I'd rather call it the Groman moment. Really, Luke. I mean, I know you're thinking about this. How far away are we from a major event like that, a Minsky moment? Is
You
it going
know,
to be China, you know, playing tough and being smart and out strategic Trump, and they're not going to bend. A lot of people think, well, President Trump says it's okay, and we like China, and that it wouldn't be sustainable, those 140% tariffs. Well, he's not the only one involved in the decision. Right? Everyone
I
thinks
say
if
that all the
he
time.
says yeah, everyone thinks because he says he's going to work it out doesn't mean the Chinese want to work it out, right?
It's, you get in a fight, the other guy gets a say. You know what I mean? You get in
Yeah,
a war, the other guy gets a say, whether that's an economic war or a shooting war. And yep, the other guy's say is basically, um, in our press and in our markets and our investor consensus is, well, it's, we're going to do to China what we did to Japan, and it is apples and oranges for a number of different reasons. And look, the reason the American leadership, policymakers, et cetera, are squawking the way they are is because they are being dictated to, and they've never been dictated to in their entire lives, and they know it. And so we're seeing some things take place that are encouraging, right? That are going to build resilience and independence. But there's this view that we can snap our fingers and have it done in a year or 2 years because we're a short-term, high-time preference society. But that's not how it worked. China started building its rare earth dominance in
yeah,
1992. And
right.
so, there's a lead time to it. So that could be part of the moment. Just there's this recognition of we're gonna reshore, and it's gonna be really expensive, and it's not gonna happen without yield curve control or um, there's a number of different things that could drive it. It is as complex an environment in my life investing.
Yeah,
I've been in finance 30 years as I've seen. And I say that because as we sit here today, you can see sort of, what we were just highlighting in high yield and in stocks. The geopolitical side
yeah,
is very in flux. The both in vis-a-vis China and trade, vis-a-vis the BRICS more broadly, vis-a-vis Ukraine, vis-a-vis Israel and in the Middle East. And then you get this AI robotics thing into a system that is over levered, right? We've never had debt to GDP this high in the U.S. It's in, and oh, by the way, we are at the end of a 150-year Ponzi scheme experiment in
yeah,
Western social entitlement democracy. I mean, let's call them for what they are, right? If I got on this call and said, "Hey, I have this investment program where we're going to put money in, and then we're going to get more people to put more money in, and then you guys will take the money. The people who got in early are going to take the money out, and we'll just get more people to come in." We'd say, "Well, that's a Ponzi scheme." Well, that's Social Security, Medicare, Medicaid, these Western social democracy. And, we don't say Ponzi schemes, we call them entitlements. And we don't say Ponzi schemes blowing up, we say demographics are, there's starting to be more young people supporting the old people. These are Ponzi schemes blowing up after 100 years. And so when we layer all of this on, um, it's as complex an environment as I've ever seen. And that's partly why I think, gold's over. Boy, I don't think so. It's
yeah.
like,
I know.
but yeah, I don't, it's sorry, I'll pause
I
there.
got no. I think it would be normal. We could even have a 20% decline. in gold,
Sure.
30% decline, and it'd be the buying opportunity for the next wave. Same
No, I
thing
think
in,
that's right. Yeah, I
how
mean, I got a
about,
ping last night or 2 nights ago. Yesterday I got a ping yesterday from a very good friend of mine who's been in gold markets a long time, and their refining partner in Singapore raised premiums across all gold bar denominations by 20%, citing shortages, not just tight supply, shortages.
right.
And I know this person very well, so like it's same kind of thing. We're so focused on the West, but what's the East doing? I suspect this gold, this gold sell-off will be bought aggressively in the East.
You have any levels? I know that's not your wheelhouse,
It's
but
not my way. I'll put that chart back up. I could see, you know, if
let's
we look
take
at,
a look at maybe a weekly on gold. So
yeah, yeah, yeah.
this is the daily. So here's some moving averages that come in at 3,600. Think
Yeah,
under 4,000 might panic some people.
yeah, I
The
would think
Johnny
so.
come lately, so some people are talking about all the way back to the breakdown. And really, if even if we pulled all the way back to 3,200 or even 3,500, it doesn't change anything,
No,
right? You
no, it
still have an
changes nothing.
uptrend.
No, I could
Some
absolutely pull back down.
All right, so there's one asset class that's finally under pressure. Why don't we talk? I wore my Bitcoin Hope shirt for you today. See that? Big, but and I think hope is great in life, not real good for trading techniques.
Yep.
We're it kind of looks heavy to me here, Luke. If we don't dig in around 100. Could we just be going through, like I said, a correction of the debasement trade? Maybe the dollar does rally to 102, and alternative assets like Bitcoin and gold take a breather. Uh, is there a critical level for you? Is 100 a big level that if we get through it, there's more downside? What are you hearing from your house of technicians that keep you in touch with the technicals of the market? What do you think?
That you go below 100 there,
It
it,
opens the door, doesn't it?
it opens the door a bit, and
Yeah.
Bitcoin's that kind of an asset where that. But two, like Bitcoin is also the last functioning smoke alarm, right? I mean, remember we saw Bitcoin when we were in February of this year, right? We saw Bitcoin break down, same kind of a thing. Interesting. Actually, if you look at the Bitcoin chart there, go back to that weekly you had up, if you will. Um, it actually reminds me a lot of the gold, right? Look at
Yeah.
how the thing has separated from the 200 year or 200 year,
Yeah.
200 day, and it is way away from the 200. That's the
Yeah.
two. No, sorry, the 50. Way away from the 50,
Yeah.
excuse me.
Yeah.
And um and then it crashed down to it, and
Gold's
people are like,
even
"Oh, it's
further
over."
away. Gold's
And then
even further away. Yeah.
everyone was saying, "Oh, it's over for Bitcoin." And I was buying it there because to me, the message of that was the US is going to have like that's the leading indicator on the economy. You that's the leading indicator on liquidity. You tell like and the US Treasury market, the US economy cannot afford to have what the message of what Bitcoin was doing in February said was coming. In other words, and I think all of that is still true except more because, basically, if you so my point is that you get Bitcoin down much further if it breaks, then to me, you buy it aggressively because the message is not Bitcoin over. The message is, oh my gosh, liquidity is tightening up too fast in the US market,
Yeah.
and Trump will have to fold, he'll have to super taco like he did, shortly thereafter. That's
Right.
my view.
What was behind this? I heard Baron Trump was short crypto that day. Do you think
No
he's an
idea.
Eliotician? But what was behind this big break? And people were in alts and they were leveraged and they're cleaned out. Maybe that's a lesson. I know how you talk to your subscribers, and you're not a big fan of leverage. And here's the reason why, right? You get these bear raids that take you out.
No, that's exactly it. I mean, if you look at, it's an extreme example. I don't think the US is going to hyperinflate, but something I've shown to people over and over is this excellent chart by Dan Oliver at Mermican Capital, which shows, in the most one of the most extreme hyperinflations in history in Weimar Germany,
Yeah.
gold went to 1 trillion Reichsmarks from, I don't know, 5 Reichsmarks in 10 years. And however,
Wow.
during the peak of, the last 5 years of that hyperinflation, if you were levered long gold in German Reichsmarks, you lost all your money 4 or 5 different times. You were cleaned out because the volatility, the political and monetary volatility that is so extreme. And so when I see extreme volatility in hard money in dollar terms, Bitcoin, gold, to me, I think it is a sign that we are coming to, that Minsky moment, right? Where that when you get real big volatility like that, go back to 2011. Remember when the US got downgraded and we had just that
Yeah.
massive volatility, or the debt ceiling, massive volatility in 2013. It's markets trying to figure out what's happening here. They don't know what's going to happen. And I think that's, what we're seeing with gold, what we're seeing to a lesser extent with Bitcoin. And ultimately, that's actually, if you're unlevered, an easy trade to make. In other words, you
Yeah.
buy weakness, because not buying weakness, selling weakness in those cases in gold and Bitcoin is a bet that the United States government is going to stand aside and default on treasury bonds. There's zero chance that's going to happen. So that's
President Trump once floated that idea
well,
about
and if
default.
let's
I
say
mean,
he does, right?
he's the king of debt.
He's the king of debt. Well, gold ain't going down if we did that day. That I would tell you that.
Okay.
So yeah,
All right.
yeah. So it's, for me, I look at that Bitcoin chart and I go, okay, yeah. I mean, it could break the 50. It breaks the 50. Yeah, it could probably revisit the levels seen back in February. At that point, to me, the message would be very clear. There's a liquidity problem, and there's a liquidity
Yeah.
problem at that point. You're going to see stocks I would suspect, see stocks under pressure.
Right.
I think you would see the dollar rally.
Right.
And I think the 10-year yield would probably go, where are we today? Probably 4 on the nose, I would guess, something like that, maybe
Yeah.
3.99.
Yeah.
All of a
They
sudden,
go lower.
it'll probably go to
Yield.
375, and then
Yeah.
it's going to start going up, and it's going to go up fast. And then all of a sudden, the move volatility index is going to spike. And all of a sudden, you'll see what we saw in, April, where the move volatility was at 176, which was, basically, the treasury market was breaking. And
You just described a narrative I'm looking for into the end of the year.
I could see that.
A breather in a breather in inflation hedges, currency hedges, pullback in the market, especially things like semis, way overdone. Semis are making new highs without Nvidia. There are some cracks showing up. Broadcom's not making new highs with semis. I think that we're set up for some type of, like you said, a little bit of a cleanse and shake. Well, what happens in the forest. Sometimes they shake the trees.
They shake the tree, and it's, to me, there's another risk, or another sort of overlay of this complicated environment, which is, the Chinese have come out and said, fine, we'll make our own semis. We're gonna make our own NVIDIA. We're gonna make our own. We are
Exactly.
making a very effective open source AI. Chinese AI. They have 5 of the top 10 spots in terms of performance around the world by at least one ranking situation, and it's open source, which means around the world, people are using it more than American closed sourced ones. And so, there's this. It's interesting, if I see NVIDIA, if semis are breaking down, and that may be a sign of, hey, what would happen to the Nasdaq if China does to AI and semiconductors what China has done to every other thing in America?
Commoditize it.
They
Commoditize it.
commoditize it and disintermediate it. Holy cow. Now, I think that's, in the short run, it's bearish for everything. In the intermediate term, it could not be more bullish for gold and Bitcoin, because ultimately, that's trillions of dollars that's when I think you will see Bitcoin and NASDAQ separate, because China can't disintermediate Bitcoin. They can absolutely disintermediate the Nasdaq, and I think they're gonna. I don't think it's going to happen right away, but I think there's starting to be concerns about it.
Yeah. Well, we'll know it that they're starting to gain some success if we see like 260. So I guess a lot comes down to November 1st, doesn't it, Luke? Where Trump says, okay, we're not going to go with those tariffs, but it doesn't mean that China will lift the export controls on rare earth minerals.
Oh, I don't think
Doesn't.
they're ever going to send us another military rare earth ever. Like I think that's off the table. And that might be your moment, right? Of,
Yeah,
what triggers an unwind.
yeah, yeah,
Because there's two things. Like number one, if you're China, why would you ever send military rare earths to the US knowing they're going to use them to make weapons to hurt you? Number one. And number two, when the US market recognizes this is the case and that the US is 5 years at minimum and probably more like 10 years to replenishing something that resembles the rare earth. Like, I don't think people understand the degree to which these things are in the US military and to the degree to which we cannot go to war without them. And so, yeah, I think you could absolutely see that. I think that would actually be a bottom in gold. I think it'd be bad for sort of much of everything else. But let's see. But yeah, November 1st, it's not
yeah,
often in markets you get a day picked like that for you, right? Where like
yeah.
the event, the potential event date.
Okay. Well, Luke, I think that people should consider subscription. I heard one guy say that he thinks your letter is weird, which is another. I read those, and it was really is an adjective for he doesn't understand where you're coming from because it's not like any other letter, which makes you
No,
stand out. There, no one writes and talks about things that you see like you.
no, I
So,
appreciate that.
I tell people check Luke out on X and check out his writings, and you'll be prepared for the Minsky moment with Luke Roman, and then they'll rename it the Groman moment. Really, always great spending some time with you, my friend. And
Likewise.
yeah, it gets more and more tense as we head towards the finish line here.
For sure. It is. Yeah, I think we're in for some acceleration in the interesting times. They've already been
By
interesting. I think they're going to get more interesting.
2026, huh? Really
Uh,
going to be something.
yeah, I think it's really going to be something.
All right. Well, Luke, thanks so much for coming here every 3 months and edifying the F.A.C.E community. We do appreciate it, and I look forward to talking to you next year.
Well, I appreciate you having me on. You were an early supporter, early and frequent supporter of FFTT. So I always remember that, and I'm always happy to come back and I really enjoy these conversations. So thank
Uh,
you.
you're welcome, Luke. It's good to know I did something right.
Well, by me for
Appreciate it.
sure, and I'm sure a lot more than just by me. So
Yeah, and you know, it's good to give people a hand and give them a leg up. But then it's up to the people to make it happen. And you certainly did manifest, great following. And it's not because of who interviews you and the exposure you get. It's because of your content.
yeah, well, I appreciate that.
Okay, everyone, Luke Roman. I don't have to introduce him. You know where to find him. It's like his name on X at Luke Roman. And that's a wrap. You could join the team in 12 minutes. Don't just count your cryptos or your bars or your shares, count your blessings, and adios. See you tomorrow. Thank you, Luke.
Thank you.